Hello, everyone, and welcome. WMLAR is excited to offer our Next Level Success series that are free educational opportunities designed to help members strengthen their businesses, tackle real world challenges, and continue growing professionally. At the end of today's presentation, I'll share a brief survey link in the chat. We appreciate your feedback as it helps us to support our presenters with feedback, and it helps us to plan future topics for the series. During the presentation, if you do have questions, feel free to use the chat or unmute yourself. But a quick reminder, today's webinar does include 1 hour of elective credit through the CE Marketplace. So make sure that if you're looking to get credit for that, we see your smiling faces participating and engaging with the presentation for the entire duration. Today's session is titled MSHDA's Homeownership Programs, Delivering the Dream to Michigan Families. We're pleased to welcome back Nancy Baker, Business Development Account Manager with the Michigan State Housing Development Authority. That's MSHDA. Nancy has 35 years with the state of Michigan, including 21 years with MSHDA directly. She's trained hundreds of realtors and industry professionals on MSHDA's homeownership programs. Nancy, welcome back, and thank you so much for joining us today. We'll turn it over to you.
Thanks, Andrea. Yeah, it's been a minute since I've done a class for WMLAR, so I'm happy to be here. And as Andrea said, feel free to unmute yourself or put your question in the chat, and I will try to address them as we go. And with that, we'll get started. What we're going to talk about today, number one, who MSHDA is, some of the things that make us unique, how it benefits you, and more importantly, your buyers, and how we help those folks on their home buyer journey. MSHDA is all things housing in the state of Michigan. We touch everything, whether it's home ownership, rental housing development, homeless issues, actually helping developers put out new projects, all of those things. We have a hand in that pie. Our mission's pretty simple and straightforward. We believe in quality, affordable homes for the people in our state. And we hope that you view us as your lending partner rather than as just a state agency. Some of the things that make us unique, number one is that we're self-funded. I don't think people realize that until just a couple of years ago, MSHDA did not receive any allocations from state taxpayer monies at all. Beginning in 2024, the legislature started giving us $50 million a year, which is great. We appreciate it. We use it for launching new programs. But annually, we generate just in the home ownership division over $1 billion on our own. And all that money goes back into housing. We're also very dedicated to stakeholder collaboration. MSHDA has had pretty large number of program updates and improvements over the past couple of years. Most of those are a direct result of conversations that we've had with the real estate community and with the lending community. So, if you have the next best idea in housing, don't hesitate. Send it to me via email. We'll consider it. How does MSHDA benefit you and your clients? We think our goals are the same. Like the realtor community, we believe in a strong and vibrant housing market. And I'm pretty certain that learning these programs is going to help differentiate you in a competitive marketplace. Knowing MSHDA, not just for the first-time home buyer, but repeat home buyers too, can definitely up your game within that market. And working with our realtor partners, and we keep track of y'all who do MSHDA deals. We've generated thousands of purchases each year. Some of our stats from the last year, we helped almost 6,200 families achieve the dream of home ownership. Of that number, over 5,300 used our down payment assistance. So you can kind of see what the big draw to MSHDA is. Overwhelmingly, folks turn to us when they need down payment help. We are very focused on education. I'm doing a CE class for you here today. But we also believe in educating those home buyers. We have housing counselors that are available to them across the state. Anyone using our down payment assistance, for instance, is required to take a home buyer education class. We also provide training to our lending partners, whether it be sales and operations training, best practices training, technical training. We cover that with them as well. What do our home buyers say about us? Overwhelmingly, they would recommend our program to their friends and family. The statistic that always jumps up at me, though, is that second bullet point. 72% of the people that use our program indicate they would have not been able to purchase a home at all had it not been for MSHDA's assistance. And lastly, half of our referrals come from real estate agents. So thank you very much. We appreciate you going out there and trying to learn these programs so that you can help your buyers. Um, I'm not going to bore you by reading these quotes word for word, but wanted to let you know we do survey each and every home buyer that goes through our program, and the comments are just, they're very heartwarming for us to read many of them, but the buyers really do enjoy what we do and are grateful for it. I will talk to you a little bit about what our lending partners have to say. We use a net promoter score to gauge our customer satisfaction with our lenders. A 30% score, net promoter score, is considered good. Our score is 78.87, so we really get an outstanding rating from our lenders. And the reasons are pretty obvious. Number one, we have removed a lot of the barriers for people using our product, things that were just really more bureaucratic than they had any reason to be. We've made that program much easier to follow. We've added staff, which has greatly reduced turn times. In fact, I can safely say about our director, the one thing that will make her head spin on her shoulders is if we go over our allotted turn times. And she has absolutely no problem mandating overtime to make sure that doesn't happen. We also insist that our staff are courteous, knowledgeable, and responsive. We're required to respond to anyone that contacts us within 24 hours. Normally, it's within an hour or two. Okay, Mission in the Home Buyer Journey. Isn't that a great graphic? Yeah, that's why it's in there. My boss really likes it, but I don't think it's really applicable, so we're moving on. Buyer opportunities. Folks within the state can make use of our network of housing education counselors that I mentioned. We have the My Home Loan Program, that's our 30-year fixed rate mortgage product. We have the My 10K down payment assistance program. We just increased our sales price limits this past June. I'll go over those specifically in your area in a moment. We have reduced mortgage insurance costs for people that use our conventional program. We also offer a federal tax credit called the Mortgage Credit Certificate, and we have increased our ability to use other DPA programs along with our own, giving your buyer more money to get into those deals. I'm going to hit on every one of these items in a bit more detail here shortly. Okay, home buyer education. As I mentioned, anyone doing down payment assistance is required to take a home buyer ed class. But in addition to that, they offer pre-purchase housing counseling, financial literacy classes, fair housing education. I want you to be aware of these folks because I know many real estate agents spend a good deal of time trying to teach that home buyer that is not really ready for a mortgage yet how to get themselves in a position to be approved for one. Whether it's talking to them about how to improve their credit or how to fix their debt ratios. I think that you spend a lot of time working with those folks. We would rather see you spend your time working with viable buyers. So when you get that person that walks in your office and says, "Hey, I've got a 540 credit score and I'm ready to buy a house," we know they're not. Send them to one of our housing counseling agencies. It's their job to get these folks home buyer ready. And you can find a list of them broken out by county on our website. Okay, the My Home Loan Program. 30-year fixed rate mortgage with very competitive interest rates. I'm going to touch on exactly where they are here in a moment, but we are generally a half to a full point below market. You can include the My 10K down payment assistance with the My Home Loan program. And the way it works is a buyer goes to one of our participating lenders. We have, oh my gosh, now I think over 105 lending institutions that do MSHDA loans. And again, this program is available not just to first-time home buyers, but first-time and repeat home buyers. Loan types that you can do under that MSHDA umbrella, certainly the government programs, FHA, VA, and rural development. We also have our own conventional product. Because we're a housing finance authority, we get preferred coverage percentages compared to the open marketplace. For instance, if someone is at the maximum loan to value, if for our program that's 97%, the highest MI insurance coverage they have to have is 18%. In the marketplace, it can be 30% and higher. So for your buyer that can qualify conventional, they have an extra added savings built right in. Our current interest rates for folks that don't need down payment assistance is 5.75. For someone that needs to use our down payment assistance program, the DPA itself is a zero interest loan. What they do is up the rate on the first. So for DPA borrowers, the current interest rate is 6.375. It must be their principal residence. We have sales price limits and income limits. Current, oh, you know what? Shame on me. I did not update our current sales price limit. It just went up, and this is the first class I've taught since that happened. I apologize. Um, what you see on the screen there, 544, 233 is a little low. It's now up over $560,000. I will correct that and send a copy of this out to the attendees before the end of the day. Income limits vary across the state depending on where somebody is purchasing their home and how many folks are in their family. Again, I'm going to go into detail about your specific area and those income limits here in a moment. We do not allow non-occupying co-borrowers or co-signers on our loans. Minimum FICO requirement, they need at least a 640 credit score. But surprisingly, our average borrower has around a 720. So these buyers tend to be stronger than what a lot of people think they're going to be. Same thing with their debt to income ratio. Maximum debt is 45% for us, but our average buyer comes in around 37. We can work with folks that have had some type of financial crisis in the past, such as a foreclosure or bankruptcy. The amount of time that has to elapse from the time they had that crisis to when they can apply with MSHDA will be decided by the loan type. So if they're doing an FHA loan, however long FHA says they have to wait. Same for conventional RD, VA. Alternative credit, we can look at it in one situation only, and that's if a buyer has a true zero credit score due to lack of credit, meaning there's nothing derogatory out there. In those situations, again, the loan type will dictate how many credit lines they need, what type they have to be, how seasoned they have to be, etc. In Michigan, we have targeted and non-targeted areas. Targeted areas of the state are where you don't have to be a first-time home buyer to use MSHDA. Income limits are also higher within those counties. The greater majority of the state of Michigan is targeted. 66 of our 83 counties are targeted in their entirety. Non-targeted counties are where you have to be a first-time home buyer. So that would be the remaining 17 counties. We define a first-time home buyer as someone who has not owned a home in the previous 3 years. Income limits are also lower in those counties. So let's talk a little bit about your specific area. I pulled the counties that surround you. Allegan County, targeted in its entirety. A 1 to 2 member household can have an income of 119,520 or less and qualify. A 3+ member household can have an income of 139,440 or less and qualify. Now, Kent and Ottawa counties are non-targeted, but within them, there are certain municipalities that are targeted. So if you have a buyer purchasing in Ottawa County, if they're buying in Allendale or Chester Township or the city of Holland, they don't have to be a first-time home buyer and they have those higher income limits. Same thing for those 5 municipalities listed in Kent County. Now, when I say Grand Rapids or Holland, I mean city of. They have to be within those city limits. So just because a property has a Holland address, that doesn't mean the city of Holland is their taxing authority. So you need to be working with a experienced MSHDA lender that knows what these targeted and non-targeted areas are. Now, in the non-targeted parts of Kent and Ottawa counties, again, first-time home buyer and the income limits are substantially lower. Before I move on, are there any questions about targeted versus non-targeted areas? Okay, moving on. Eligible property types, single family homes will do both new and existing. If it's a new, never lived in home, keep in mind we're doing the end financing. We're not doing the construction loan. Construction has to be finished before we will buy that loan. We also do manufactured housing, and for many years with MSHDA, we only did multiple section manufactured homes. Beginning last year, we also added single wides. Either type has to be on the original site it was first constructed on, built after June 14th of 76, affixed to the property, and taxed as real estate. For the single wides, we also have size minimums, at least 12 feet wide, with at least 400 square feet of gross living area. Other eligible property types, condominiums. We don't see as many of these come through our office, probably based on the items you see there on the screen. They've got to be pre-approved by Fannie, Freddie, or the government insurer. Additionally, if it's an FHA loan, we make the lender responsible to make sure that condo is insurable, and that's for both new or existing. If it's conventional mortgage, we want a warranty certificate signed by their underwriter. We recently doubled our acreage. It used to be much less. Now we have a 5-acre maximum, but we'll even go up to 10 acres if a waiver is requested and it meets our requirements. Waivers can only apply to those properties that have a meets and bounds legal description. That generally are residences out in rural areas. If it's platted, it's 5 acres, period. There's no exception for that. And that tends to be lots that are within a village, city, town. Other property requirements, we need a full appraisal with all utilities on. Repair escrows, we only allow if they're weather related. So otherwise, repairs have to be done before that file comes into MSHDA for approval. If we approve a repair escrow, $500 minimum or 1.5 times the bid or the actual repair amount on the appraisal. So that's a good thing to keep in mind when you have a buyer that perhaps is purchasing that fixer-upper, that they're aware that those repairs have to be done first. We do require mortgage surveys in certain situations, always for new construction, or if it's required by the title company. And I hate saying this because it sounds so vague, but on a case-by-case basis. Generally, when you see that, they're questioning whether this purchase is actually for a single-family home or if somebody's looking to, I don't know, maybe build a house or two on a little development property. Along with the maximum acreage change that we, increased recently, we've also changed our rules regarding more than one lot. Previously with MSHDA, you could not have a property that had two or more separate buildable lots. We've changed that to say that we will finance those properties to the extent that that land is necessary to maintain basic livability of the residents and is considered common and customary for the area. And I'll give you an example, well, two actually, one where that works and one where it doesn't. The first one is a file that we let the lender know we couldn't do. The house sat on a lot on one side of the road. Across the road was an empty lot with a dock going out to the lake. Now, while lake access is a great perk for a homeowner, it is not necessary to maintain basic livability of the residents. So that was a no-go. One where it would work, say you have two lots, house on one, garage on the other. In Michigan, you can argue that a garage is necessary to maintain basic livability of the residents, considering our weather. If you have a situation where you're not sure, just present that scenario to your experienced MSHDA lender. 9 times out of 10, they're going to know the answer. If they don't, they're going to contact me, and I'm probably going to have a conversation with an underwriter. All right, the My 10K program. If I have not bored you to tears by this point, this is what you want to pay attention to because it's really what gives the most bang for the buck, so to speak, to your buyer. I know that you all as real estate agents know that that down payment is still a huge barrier, particularly for that first-time home buyer. Using the MSHDA 10K program, very often a home buyer can get into a new MSHDA loan with less money up front than what they have to spend for a new rental property. When you figure in first month's rent, security, deposit, etc., getting the keys to a MSHDA home can cost them less out of pocket generally than that does. Now, the My 10K loan is technically a zero interest soft second loan, meaning it's not accruing any interest over the life of the first mortgage, nor is the borrower required to make payments on it during that time. Now, I say technically interest free because if you recall from the interest rate page, what we do is up the rate on the first mortgage if they use our down payment assistance. So they are paying for the use of this money one way or another. The monies can be used to cover the down payment, closing cost, and prepaid or escrow items. We require a cash investment from the borrower of 1% of the sales price. That can also come from an approved gift source. So, if the bank mom and dad are willing to come in with 1% down, they can basically come to the table with zero money. Home buyer education, again, is required. When they get that home buyer ed certificate, it's good for a year. This next bullet point is worth repeating to your buyer more than once. This is not a grant. It's not forgivable. It will eventually become due, and they have to pay back that down payment when they sell the home, refinance, pay off that first mortgage, or the home ceases to be their primary residence. When any of those things happen, that DPA becomes due in full. Before I move on, are there any questions about the down payment assistance or anything else that I've covered so far?
Nancy, is there a timeline on that?
Timeline on what, Andrea? On
Like
paying
if
back
they,
the DPA?
yeah, like if they've had the mortgage for say 15 years, is it still repayable if they were to sell?
Right. It has to be, it's never forgiven. It's not waived.
Just
Well,
never, never.
never is a strong word. Let me put it this way. We're not monsters. Things happen. If something happens with a buyer that has our down payment assistance that's kind of out of their control and they have to sell and they're not going to get enough money from the sale to pay off the down payment assistance, we can forgive some or all of it. It's kind of tricky to do because you have to be at the point where that sale is going to happen. The title company sends us paperwork on it. We see what's what there. And, very, like I said, as long as that situation is not of their own making, Yeah, we can usually forgive a portion of it. Now, is this something you really want to say to a buyer up front? Probably not, because then they get it in their head and think that, oh, it's forgivable. I never have to pay this back. Not true. Only in certain situations. And again, something that's out of their control where they are compelled to sell that house at a loss.
Hey Nancy, I have a question. Sorry, my
Sure.
picture's not there.
No, no, you're
My
fine.
computer doesn't love me today, so here I am. So I used this program like many years ago, and I thought that um, the person didn't have to repay it as long as they were there for like, I don't know, 5 years or whatever it was. It's been many years since I've used it, and I've only done this program once. So I thought back then it was you didn't have to repay it as long as you lived there for like 5 years. I thought the five was just a standing out. Is that really
Yeah.
true, or did somebody just tell me that and it really wasn't true?
No, no, no. It's a great question, and I can tell you where this confusion comes from. Because you know what? Occasionally, we do offer a down payment assistance that's forgivable or is a grant when we come into monies we weren't expecting. For instance, the federal government with their Step Forward program, that was money that all the states got. Um, Michigan had a Step Forward DPA that was forgivable at 20% per year. So after 5 years. The thing is with programs like that, the requirements are usually stricter and they don't last that long. They last until the money is gone. But that's why there's confusion out there when people think of, this DPA program, which is the one that's always around, thinking that it's forgivable or it's a grant. I can understand where that confusion comes from, but you're absolutely right. Sometimes they are out there. Not today. We
Yeah,
don't have
no,
one,
I know.
but
I
yeah.
understand that. The other question I had, I'm sorry. You're saying the minimum credit score was 640. Has it always been that?
It actually used to be higher for manufactured housing. We had two credit score requirements, 640 for stick built and condos and 660 for manufactured housing. Now it's 640 across the board.
No
And
matter
it's been
what.
that yeah, it's been that way at MSHDA since I started there over 20 years ago. So
Okay.
I don't
All
see
right.
that one changing.
Thank you very much.
You're welcome. Anyone else? Okay, moving on. As I mentioned, we've made quite a few program changes over the past, 18 to 24 months. So for those of you that are familiar with MSHDA, it's good to hear what those are. Required applicants was a big one. Previously with MSHDA, all adults intending to occupy that property had to apply and credit qualify. As you can imagine, that knocked quite a few people out of the eligibility pool. Say you had a couple, one had good credit, one had bad, they couldn't use MSHDA. Now they can. We still need to know everybody's income because it's a household income limit, but we can go with as few as one buyer. Turn times, our goal is to turn files that are turned into MSHDA for commitment in 2 to 3 business days, 85% of the time. In 2025, we did it in 1 to 2 business days, 90% of the time. But things happen, when you have holidays, for instance, Christmas and New Year's, we're only open 3 days in each of those weeks. Things can slow down. When we changed our income limit last year, and doubled it, basically, our volume went through the roof. So, did we get behind a few days? We sure did. But again, our director, no problem, assigning overtime. Our underwriters actually worked overtime almost the entire summer last year, so God love them. Again, single wide manufactured homes are now allowed. We increased our sales price limits. We now allow payment of single premium mortgage insurance. We never used to. And you can use down payment assistance funds to cover that. So if you have a buyer that's maybe concerned about what their monthly mortgage payment's going to be, that might be an attractive option for them. And we've also gotten much more flexible with stacking other down payment assistance programs with our own. I've just listed a couple on there that are already pre-approved. City of Jackson has a DPA program we can work with. Federal Home Loan Bank of Indianapolis has launch and home boost funds we can work with. Um, various habitat chapters have programs we can work with. That's something that the lender you work with can tell you whether or not they have a program in their area that they can do. Oh, just a second here. I lost my presentation there for a minute. Huh. There we go. Can you still see that, folks?
Looks good.
Good. Thank you. I don't know how I managed to get off that page, but I did. All right. Okay, that's it for our loan programs. Now I want to talk to you about the federal tax credit we offer, which is the mortgage credit certificate. With MSHDA, a buyer is doing one or the other. They're either getting our loan or they're getting this federal tax credit. They cannot be used together. This credit allows a buyer to credit 20% of the mortgage interest that they pay annually on their federal taxes. Keep in mind, a credit is a dollar for dollar reduction in their tax liability. Excuse me. The remaining 80% they can still use the regular deduction on for mortgage insurance. It's good for single family, owner occupied principal residences, and it's available for the life of that original mortgage, whatever the term is. I don't know if it's 15, 20, 30-year term because it's not a MSHDA loan. It's the lender's own product. So, again, I apologize for having the wrong sales price limit there. I'll get that fixed before I send this out. But sales price limits, income limits, targeted, non-targeted area rules are all exactly the same as they are for our loan program. The buyer pays a fee. $400 comes to MSHDA. The lender, if they wish to, can charge an additional $100 for their time and effort. It's paid at closing and can be covered by seller concessions. Acreage is 5 acres, period. There's no exceptions to that. It's a federal program. They set those rules. Any unused credit that the buyer has in a particular tax year, they can carry forward for up to 3 years. The calculation's fairly simple. You have the interest for the year, multiplied by the total mortgage amount. Oh, geez, I can't even talk today. Total mortgage amount times the interest rate is going to give you the interest for the year. Multiplied by the 20% MCC rate will give you the tax credit for the year. So if you assume a mortgage of $300,000 at 6% interest, that first year's tax credit is $3,600. Now, how much did they pay for that credit? They only paid $400 or $500 for it. So it's already paid for itself and then some. Okay. Let me get to my next screen here. Whoops. Now, lenders like this credit for a couple of reasons. Number one, it's a good sales point that they can use. Number two, they can use it to gross up income. So if you have a buyer that's borderline qualifying for a mortgage, this tax credit can put them into the eligibility box. Additionally, the other thing I really should tell you about this credit is that it's kind of tricky because every taxpayer's situation is unique. Some people are going to benefit more than others from this tax credit. Those that tend to benefit the most are those that don't have enough tax write-offs. I'm not a tax expert. I don't know many loan officers that are tax experts. My recommendation to a buyer who is interested in this tax credit is that they talk to their tax professional. Because folks that don't have a lot of tax write-offs, or have taxable income for that matter, like some types of Social Security income is not taxable, this credit's not going to do a whole lot for them because they don't have the liabilities that they can write it off on. So again, you kind of got to put the burden on the buyer to pull the trigger on that decision and talk to a professional for advice. Any questions about the mortgage credit certificate? Okay. Best favor you can do for your buyer is hook them up with an experienced MSHDA lender. You can find them on our website. We have a couple of different lists. Our experienced lender list, broken out by county, lists every loan officer that's done a MSHDA loan in that county in the previous 6 months. But additionally, we have our top producing loan officer list. That's broken out regionally, and it gives you the top 10 producers of MSHDA loans within that region. And those are the folks that write these all day long. You can be sure that your borrower is getting somebody that's really familiar with the program. Application process is pretty simple. Starts with a signed purchase agreement going to the participating lender. They go to a secure website, lock in the rate, reserve the funds, and then the lender actually underwrites and approves that loan in their office. They send that loan package to us, and we're not underwriting it again. We're reviewing it for compliance. Does it meet our income limits, our sales price limit, our acreage restrictions, etc.? Within 2 to 3 business days, we're going to look at that file, and one of two things is going to happen. Either everything's great and we're going to issue a commitment to the lender, that's their cue to close. Or if we're missing something, we're going to send a very politely worded email telling them we're missing A, B, or C, or questioning something else. Once the lender gets that commitment, they close and fund the loan, send the closing package to us. We're going to purchase that loan and wire the funds to the lender. Okay, so once that happens, then the loan is going to get transferred to our sub-servicer, Loan Care. That contract is currently out for bid. I'm not sure if Loan Care is going to win it again. They might, or it might be somebody else. We never sell that loan. We just have a sub-servicer. So occasionally when the servicing contract is transferred to someone else, people think that we have sold their loan. We have not. We have just contracted with a different entity. Loan Care will send a welcome letter to that buyer instructing them on how to make their payments. Now, once they get into their home, we don't abandon them. You know, stuff happens. Perhaps they need counseling for financial literacy or for budgeting. They also have home maintenance training at some of these counseling areas, these counseling education centers where they will teach them how to do electrical and plumbing and tiling and all kinds of different things. They also have mortgage delinquency and default counseling. You know, life happens. They provide disaster relief counseling as well. Once that buyer is ready to sell that home, then they can contact us or Loan Care for payoff information, and they will go from there. I want to talk to you for a moment about recapture tax. The good news about recapture tax is most borrowers are never going to encounter it. If they do, it's capped at 6.25% of the original mortgage amount or 50% of the net gain on the sale of that property, whichever is less. For recapture tax to occur, all three of these things have to happen. They sell that home within 9 years, i.e. less than 10. They are earning significantly more money than they were when they bought the home, and they gain on the sale. If all three of those things happen, they may owe a portion of that gain to the feds in the form of recapture tax. Now, in Michigan, we don't like recapture tax. We think it's a barrier to people using our program. So any buyer that has used a MSHDA program and gets hit with recapture, we're going to write them a check. We're going to reimburse them for whatever they had to pay the federal government. They have to show us proof they've made that payment, copy of their tax return, a copy of the IRS 8828, which is the form they use to figure out how much they owe, a request form from it, and a 4506 and the closing disclosure from the sale. We get those items, we're going to reimburse them in full. Any questions about recapture tax before I move on? No? Okay. All right, I have on the next slide, this is just a short video about one of our home buyers.
I'm not hearing any volume on that, Nancy.
Oh, you're not? I apologize. Sometimes that happens when we try to do these virtually. So, what I will tell you is the point that this woman makes in that presentation, or excuse me, in that video is that, you know, I didn't know there were programs for people like me that are middle income. She's like, I'm not a low income. I'm certainly not high income. I'm right in the middle, and I didn't know there was something out there like that for me. That's one of the big misconceptions about MSHDA is that it's only for low income folks. You could see by those sales price or income limits I showed you that that's definitely not the case. The income limits are pretty generous. Okay, these are my colleagues that cover other parts of the state. I am generally West Michigan and Northern Lower Michigan, but if you have offices in those other areas, you're welcome to reach out to either Eric or Barb. This is our map along with our contact information if you want them to teach class in another area. I'm going to send a copy of this to Andrea once I've updated it. Again, I do apologize for that. And Andrea, would you be kind enough to email it out to the folks that are in the class today?
Yep, absolutely. And we'll also
Uh,
include it in a blog post that will have the replay of this as well. Should
yeah,
be out in Monday's weekly memo.
okay. And again, I can't believe I missed that when I was, because I updated all the income limits for your specific area. I just didn't do the general one, but I will fix that.
No worries.
Um,
Congrats on being human.
thank you. My husband might question that once in a while, but it's good to have your vote. Um, any questions before I let y'all go? Okay, when Andre sends you the copy of this, you'll have my contact information because I guarantee you you're going to have questions in the future. And I enjoyed being here today, and I guess I will
Hey,
head on
Nancy, quick
out.
question for you.
Oh, sure.
Kyle here. How does the state distinguish a targeted versus non-targeted county?
That's a good question. There are a couple of inputs into that, primarily federal. The main thing they're looking at are areas that they want to encourage more home ownership. So those are your targeted areas. Michigan does have some input into that, and I have heard through the grapevine that they're probably going to review them again this year. The last time we made changes to the targeted and non-targeted areas was about 10 years ago. So I would not be surprised if they look at them again, but good question.
Okay. And then another question. Um, does the 10K down payment assistance say there's a vacant house and they want to build? Would that help take care or that?
It's the end financing.
Okay.
If they have like when you say vacant house that they want to do repairs on, is
Sorry,
that what you're
just
asking me?
take remove it, tear down and
Tear down
rebuild.
and then build a new one. Yeah, we can do the end mortgage. It's kind of a two-step closing process where they roll that construction loan into the final mortgage, but we don't do the actual upfront one, so they have to work with a lender that's got financing options to do that.
Okay. Another hypothetical for you.
Sure.
Let's just say it takes 30 grand to take the house down. I paid to get that house down. Is that any complications of them securing an end loan from MSHDA to get a new build on that land? Or since
Well,
I
like I said, the build has to be financed otherwise. Okay,
okay.
so take Edwin Allen Builders, for instance. They work with Mishnah a lot, and they will build homes like on spec. And then buyer comes in, and that's where Mishnah comes in. You know, the build has already been financed, but they can roll that construction cost into that end mortgage. Does that make sense?
Yeah, I
Yeah,
know how to navigate that one. So
yeah, we're not going to be able to pay for construction up front, which is unfortunate. I think it would make the process much easier. I think part of the problem with that is that we don't have the staffing to do all the disbursements, and that's I think where they run into issues.
Okay.
Anybody else? Okay, well, thank you again for having me. Andrea will be in touch, and you all have a great day.
Thank you all. Thank you all for being here.